All right, welcome back, everyone. Welcome back to another episode of Wall Street Rundown. I'm your co-host Billy. Wale with me. What's going on, Wale?
Not much, everyone. How you doing?
Man, this has been a good week. We just talked about it. It's been a really good week. We did not expect some of those moves that we got. Did not expect some of those places that trades that we took to actually print like that. But it has been a good week overall. Man, Dow Jones actually hit a record high today, and then it kind of retreated a little bit. But yeah, it hit a crazy record high today. S&P kind of dropped down a little bit. If you look at SPY, S&P 500, it kind of dropped down a little bit. Not a whole lot, but we kind of shaved some of the wins from this week a little bit. The Nasdaq also dropped by 0.4%. Russell also was down 0.5 to zero point 0.6. There seemed to be a lot of buyers coming into that level. If you look at IWM, like that 224, 225, 226 areas, like it looks like there's a lot of buyers there. But we'll see what happenens next week. But overall, man, like there's been some crazy move. One of the crazy moves that I was gonna talk about is the United Group move that they did. That was crazy. And Wale, shout out to Wale. You sent me like, because I was like, why is this thing moving? But Berkshire Hathaway actually took a position in UNH. And
Remember
I
we was
think
we was we was talking about what did Warren do with all that cash?
exactly, and literally like not even 2 days later, boom, there you go. It's they revealed their Q2 purchases and stuff, and UNH was in there. I think NUE was in there, LEN, DHI, LAMR. Like so it's like they invested some really good in some good companies. So let me get your input on that, man, because that really helped United Healthcare Group and I went out a little bit also.
Yeah, so one of the things that we talked about in the last episode was we had Berkshire sitting on all this cash. Like, did
Mm-hmm.
they make any moves while the market was down? And the
Yeah.
answer is yes. And if we look at the companies that they purchase, again, when you look at Warren Buffett's investment philosophy, when we talked about, him not owning like the Nvidias of the world and what do you call it? The Planeteers of the world and things like that. He is a value investor, right? So he's
Mm-hmm.
looking for undervalued companies with good balance sheets. And I guess they did their due diligence on UNH and that fit the bill. So now I will say this though, it's not a confident position, in my opinion. And the reason why I say that
Mm-hmm.
is they put up $1 billion, right? But I want to say that their total equity portfolio is 300 billion. So if you really rocking with UNH like that, like
Yeah,
okay,
you would have went heavy.
you would have went heavy, but they only put in $1 billion. I mean, don't get me wrong, it's a lot of money, but you have to look at it in perspective to what they have in their total portfolio. It's really a small position in comparison to the total portfolio. So I will say that they'll monitor the situation. They'll take a look at how things run. But because it's so small, I think if they see any signs of trouble, I don't know if he's going to buy more. I think they'll bail out of the position. So,
Yep, yep.
but UNH got a really big boost today. We saw last week we saw politicians loading up on UNH and Centene.
Yep.
So, maybe they knew something. Maybe they shared some stuff with, but I don't know what happened.
They
But
probably somebody told them about Buffett already buying, so they probably just loaded up.
And I know other institutions were buying because, again, it's
Yep.
one of those things where they were looking. This is probably some people's mindsets when you're looking at a large company, a well-known brand like UNH. It's like, okay, this is a company that's probably they're on hard times. They probably have to, do some restructuring and
Mm-hmm.
rethink things. Healthcare ain't going nowhere, right?
Nope.
As Americans, we are very unhealthy people when it comes to diet and exercise. So healthcare ain't going nowhere.
Right.
They've got millions and millions and millions of subscribers. So it's like this is a turnaround story.
Yep.
So if a stock is down 50%, they've got a good balance sheet, right? We probably do a deep dive into their balance sheet sometime and
We
take a
should.
look at that.
Yeah.
And they're like, hey, I'll take a gamble on a stock that's down 50% on the year
Yep.
and then see
Yep.
what happens. So
Because at
now if
some
they
point they were at $630 stock. You
yeah.
know,
Now
they had 304.
if they would have put up like 5 or 10 billion, I'd have been like, okay,
Mm,
now you talking. But $1 billion out of a $300 billion portfolio, yeah,
Well, we'll see. We'll see
Yeah,
what they
we'll see.
maybe they buy more in Q3. I don't know.
Yeah,
We'll
maybe they
see.
buy more in Q3, but the Buffett effect is real, though. I mean,
Oh, oh,
the
it is.
Buffett
It is.
effect is real.
It is. It is very, very real. I was trying to look at some of the other positions that they had and see if it's actually up. Um, Lee was it LEN? Leaner, is actually down today. Popped up a little bit, gapped up, and then it dropped again.
Mm,
So yeah, I mean, listen, like we talked about this, right? It's like when are we gonna see Buffett actually start deploying some of those money? He did not. They did not deploy a lot of them, but they deployed enough.
hmm.
So we'll see, man. We shall see what happens with that. The other one that you kind of share with me that was interesting, that Aklo call buyer, they bought $387,000 worth of call at $115 strike. So I see. I mean, I remember the days when nobody was even like, I haven't even heard the word Aklo anywhere. And now it's like everywhere I look at Twitter, it's just like everybody's talking about Twitter on X, everybody's talking about Aklo, everybody's talking about like taking position and stuff. So it's like I think people are finally starting to catch up,
Yeah, who put
So
you on who put you on game first
yeah,
though?
yeah, I
Let's
better
yeah.
recognize
Yeah,
when it
yeah.
was $5 and
When it
nobody was
was
looking
five
at
dollars.
it.
Back
But
then they didn't
yeah.
want me. Now I'm hot and everybody on me.
Oh, Mike Jones, Mike. Shout out to Mike Jones, man. If you guys don't know who Mike Jones is, please go look up Mike Jones, man. That was, yeah, that man came up with a one-hit wonder and be like, made a name for himself. Yeah. But anyways, but yeah, Aklo is I think it's getting a lot of attention. It's kind of down a little bit. I think there's another opportunity loading up. Again, if you believe in the story that we keep telling you guys about nuclear, that's a stock that you guys can keep an eye on. There's other stock that we shared, but we talked about a lot about upload.
Yeah, let me give you something I've been watching on Oklo that has been pretty consistent. Um, and if you have a chart on you, I will say that if you look at Oklo, one of the areas it has respected is the 200-day, is it the 200? Yeah, the 200-day simple moving average on the 4-hour chart. It has respected that trend pretty continuously. And every time it's kind of dropped in that area, it's consolidated, 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 and then moved higher. So right now it is still above it. Now you have to also turn on after hour trading to show the candles on the after hour in order to see this. But yeah, and that 200 EMA and the 400, I'm not EMA, SMA and the 400 SMA on the 4-hour chart are still steep. So I'm running with this and until they tell me that there's something wrong with their trajectory as far as when they're gonna deploy their SMR. I think it's called Aurora. I mean, I'm just gonna have to rock with this one for a while. So we'll see, man. We'll see. But yeah, I might have to roll some of my leaps higher because I have 2027 or 2026 leaps at the 60 strike. So we're deep in the money now
Yeah,
because
yeah,
we got up to 85. So
yep, yep,
um,
yep.
yeah. So I might have to roll some of that, take lock some of those profits and roll them into a higher strike with a longer expiration.
I mean, that move happened so quick, man. Before we can even say I chew, just like poof, gone. It's
Because I
like
don't think anybody expected the regulatory hurdles to get overcome
no,
that quick. No,
no, that was
no.
too quick, man.
Yeah, too quick.
So on the other hand, Applied Materials, if you guys will look at that chart, that was an ugly drop. They did some good stuff. They beat on revenue, they beat on earnings, but their guidance was weak, man. If you look at that chart, that thing dropped out of the heavens.
Ooh,
I
ooh, that's nasty.
mean, that thing dropped. Shout out to Wall Street Trapper. He was talking about it. I think he was down like $38,000 on his position. I was like, yo, it'd be like that sometimes, especially when you like go heavy on positions like that. It'd be like that, man. But um, based on his position, I think he got it to like December or something. So he probably have time if he can recover. But this drop was nasty, man.
Nasty, nasty.
Yeah. But again, that's the thing with this option thing, man. Like you have to be really, really careful, or you have to really manage your risk. You know what I mean? So Shout out to him for managing his risk and going out far out the money and far out also in December. So
This
maybe
is
he'll
this
maybe
is
he'll come back.
this is one of the things that I would probably say with someone like that who likes to trade longer dated options contracts with um with large positions like that. To me, when you get to that level, you need to start deploying some of the more complex strategies when you're
Mm,
going into like an earnings report. Because one of the
that's
things I
true.
usually do with Oklo, right? Going into an earnings report, I hedge, right?
Mhm.
Just in case, because
Just in case it goes the other way. Yeah.
yeah, am I a long-term holder? Yes, but earnings can go either way.
Hmm.
So if you buy short dated puts, cheap puts, right, to hedge your position, someone like him, you put up, if you got a $38,000 position, or he said he was down 38,000. Okay, so that position is
He put
large.
more. Yeah.
So
He put
if you
more.
got that kind of cheese, take like 10 grand, buy short dated puts.
Yep.
If it drops 10%,
You make some
you
good money back.
you make some good money.
Yep.
Take that capital and average down.
Yep. Yep.
That would be my approach. When you start trading to a certain portfolio size where drops like this can really harm your portfolio, you got to learn some hedging strategies.
Yep. Yep. Especially
Just,
if you're trying to play through earnings, like
yeah, if
especially
you're
if you're
trying to
playing through
play through
earnings.
earnings, because it can
Yeah.
go either way. It's a
Yeah.
50-50, it's a 50-50 chance that it'd be
Yep.
good or bad.
Yep. Yep.
So, yeah, tell Wall Street Chopper to hit me, man. Put him
Hey,
put him
listen,
on
I'm
game on some of these advanced option strategies.
we're gonna tag him on this one. We're gonna tag him on this one. Shout out to you, Wall Street. But other than that, man, Intel. I mean, Intel.
Talk to
Come
me
on,
nice. Talk to me
come
nice.
on,
Talk to me
come on,
nice.
y'all. Like when you said, like you said, like that 1920 area is a strong hold. Like every time we've seen that for months, you go down to that 19 area, it gets bought up. I mean, it might get stuck around 20, 21, 22, then it goes back down. And I was like, yo, like this is crazy. And then we talked a little bit about also, what did we talk about like a year ago? We said Intel is such a household name in America, and the fact that they're an American company making chips in America, I don't think the U.S. government is just going to let him go like that. They're going to do whatever they can to bring him back to the top. And then we saw Donald Trump kind of criticize the CEO a little bit. What happened? The next day, the CEO went to the White House, met with him, and then what happened after that? Donald was like, you know what? We might take a stake in the company and trying to figure out how to get them back to whatever they need to be. So it's like the whole story we put together last year. It literally the script. Like you would think somebody gave us a script.
I need to find what episode we had this
Yo, you
conversation,
should, man.
but I was like, the US is not going to let Intel die.
Nope,
They are not going to let Intel die. It's just not going to happen.
it's not gonna happen.
And Intel, in my honest opinion, still has a long
Oh,
way to go. Don't get me
absolutely,
wrong. It
absolutely.
has a long, they got a lot of dust and a lot of nasty things they got to clean up in house. But the CEO is being pretty aggressive as far as trying to get that done. Now,
Yep.
the US taking a stake in Intel, some people are asking, like, can the US do that and things like that? So if you go back to history, um, when we had the financial crisis,
Yep.
the US took a stake in General Motors
Mm-hmm.
to help that company because that's an
Mm-hmm.
American company that they not gonna let die. So
Yep.
the US took a stake in them. If you go back to COVID, American Airlines,
American
right?
Airlines.
An
Yep.
American company. The US is not going to let that brand die out. So
Yep.
Intel, one of the highest, I mean, one of the well-known brand names in the US, used to be a dominant chip maker in the
Yep.
US.
Yep.
Um, they're building a factory in Ohio in the US, right?
Mm-hmm.
So I'm pretty sure the CEO was like, look, we're committed to the American brand.
Yep.
We want to bring jobs to America. We want to build in America. And Donald Trump was like, all right, we got some cheese. Let's see what we can do.
Yep.
And
Yep.
nothing official has come out yet. So if this falls through, Intel might drop. It's
Yep.
possible.
Yep.
But we'll have to wait and see if something actually comes through. It may not be a large investment, but I would not be surprised if something becomes official. Intel.
So,
skyrockets again.
yep, yep. And I won't be surprised if the administration start twisting some arms. I'm talking about twisting Nvidia's arm, twisting some of those other companies' arms. Like, look, Intel is a household name, it's an American company. You guys better send some business their way. You know what I mean? Or do some type of partnership with them. So I think they're gonna come with some creative stuff. I don't know what it's gonna be yet, but I
Yeah, I don't
really
know
have a
either.
feeling that they're gonna twist some arms, or maybe even give Intel a bigger break than Nvidia. You
Hmm.
know, so we'll see, man. I think the
Yeah.
story is still unfolding. Right now, it's all rumors, and what do you always say? Buy the rumors, sell the news. It's still rumors right now. So I'm just saying, it's it's
And
it's a good it's a good company so far.
and remember a couple months ago, if I wasn't mistaken, there were some grumblings that Intel was trying to partner up with, I don't know if it was Nvidia or if it was Broadcom,
I think it was
and they were
Nvidia.
yeah, and they were trying to sort of figure out how they could work together.
Yep.
Because understand that NVIDIA is a chip designer. They don't manufacture or build chips, right? They use Taiwan Semi to help them build their chips.
Mhm.
If let's just say somehow, some way, they can partner, if NVIDIA and Intel can partner together where Intel is able to produce maybe not some of their Blackwell chips or their high-end chips, but maybe able to
It-
take some of that production load off
Yep.
of
Yep.
TSM, boy, that stock, I'm telling you, that
Yep.
stock is gonna move.
Especially the Chinese, the one they're
That's
trying to send it to China. The
that
H
stock's
two
gonna
H
move.
twenty, I think.
That stock's gonna
If
move.
if they can
Yeah.
say, hey, you go ahead and produce the older version,
Hmm.
right? And then those are the ones that go to China
And then have TSMC focus on more of the high
on the
end
more
stuff.
advanced one.
Yeah.
I'm telling you,
So
man.
I mean, there's a lot of optimism to
Yep.
have in Intel, but you also have to have patience, and
Yep.
you also have to they have to execute because
Yep.
as a CEO, you can have all of these bright ideas, right? But if you're not unable to execute them properly,
Yeah.
you know,
Yeah. Yeah.
it can fall apart. But I've been preaching to the choir. I've been saying Intel under $20 is a buy. Intel
Mhm.
under $20 has been a buy for
Yep.
me. And
Yep.
if we look, let me look at my position now. And this is just shares. I don't own any leaps on Intel, unfortunately. But let's take a look and see where Intel is. Yeah, so I think I was up like 30% on Intel on shares. So
Nice.
yeah, man, I'm running with this story. I'm going to ride this one out. So we'll
Yep.
have to we'll
Yep.
have to see how it shakes out. But
Yep.
patience is going to be needed, though. Trust me.
Oh, heck yeah. Heck
Yeah.
yeah.
So
That's why I got my leaps all the way to 2027. I was like, I ain't playing with this thing. There's gonna be
and
days. There's gonna be days when it's gonna go down, and I'm gonna buy some more. You know.
yeah,
So yeah.
and those
But
leaves are sitting pretty after this move.
man, I'm telling you, it's
Yeah.
good. It's a good week. It's been a good week.
And
All right, man.
we had somebody in our trading group. I got a screenshot from
Mm.
Intel. Profit today was 40,000 on Intel alone today.
God, that's
20,
nuts.
20, 40,000.
That's
All be
nuts.
all because I spotted it yesterday and said, "Oh yeah, Intel's in a short squeeze."
That's
And
nuts.
and Lord behold, if you're a charter, yeah, we identified what 21.95 where the shorts were
Yep.
located,
Mm-hmm.
and yeah, it got squeezed and then boom.
That thing shot like a cannon,
Yeah, it got
man.
shot out of cannon. So shout out to the trader that made 40 bands in our group today.
Hey, shout out, man. That's some good. That's some good week. That's a great week. You can take a break if you want to.
You can take
Wow,
a break.
man.
You can take a break. If you got kids, put that 40 away and invest it. Yeah, you got your college money in 20
Yep.
years.
Yep. Well, congratulations. Congratulations, man. That's amazing. That's amazing. Let's move on to PPI, man. PPI was up. It rose 0.9% month over month in July. That's the largest increase since 2022. That's crazy. So let me get your opinion on that, man, because some of those things, I don't know what's gonna happen with the rate cut and stuff, but we keep seeing some stuff kind of like increase. But at the same time, we're talking about there's no inflation. So let's talk a little
Mhm.
bit about that.
So the whole no inflation talk, yeah, That's not a
Yeah.
that's not real.
Again, I said it before. Somebody was watching the numbers this time. Somebody's not telling the truth. Somebody is not telling the truth because there's no such thing as no inflation. Somebody's not telling the
So the inflation numbers finally hit the tape on the producer side. So
truth. Mm-hmm.
let's talk about the difference between PPI and CPI. So PPI is the price producers pay to build or make their products, right?
Yep.
So if
Yep.
I am a home builder, part of my production price will be stuff like wood, right? Things of that nature, things that I need to buy to produce.
Yep.
CPI is what we as consumers pay when we get the final product. So that's the difference between PPI and CPI. Now, producers, we've been saying it, producers have been eating a lot of the extra cost on tariffs.
Yep.
A lot of companies have been saying that we're eating extra cost, margins are getting a little bit thin, things like that. And, it's starting to show up in the numbers. It's
Mm-hmm.
starting to show up in the numbers. So the question remains, and this is the thing that I hate. Well, I don't know why they don't always do PPI first and then CPI. Because I've seen PPI first, then CPI, then I've seen
Yep. Yep.
CPI, then PPI. Like, be consistent, right?
Mm.
Anyway, that's a discussion for another day. So PPI came in hot. The question is, when is it going to show up in the CPI? Because it
CPI.
hasn't shown up as much in the headline CPI,
Yep.
but it's shown up in the core CPI.
Yep.
So we're going to get new numbers before the next Fed meeting. And I'm telling you, if we don't get a rate cut, it's not going to be pretty for the market or small caps.
Yep.
Because I'm pretty sure Jerome is going to have questions about that at Jackson Hole next week, and he'll
Mm-hmm.
have to address that.
Mm-hmm.
And the people on the committee are going to have to say, okay, what do we do? Now, he might say maybe we can cut 25 and still be good, right?
Mm-hmm. Mm-hmm.
But I think 50, people are saying 50, that 50 is off the table. I can
That's a
promise you that
lot.
50 is off the
That's a
table.
lot.
Now, I will also say that before we have our next Fed meeting, actually, no, what's today? August? We might get one
August
more
15th.
PPI reading before our next Fed meeting. We might. When's the next PPI reading? Let me see. September 10th. Okay, yeah. So
Mm-hmm.
September 10th, we get our next PPI reading. Our Fed meeting is on September 17th. So here's what I will say. If the next PPI reading or the next CPI reading is hotter than expected, we might have to that rate cut might come off the table.
Mm-hmm.
Now, if it's not and it comes down, then people might look at it and say, "Hey, it's not a trend. It was just kind of like a one-time phenomenon."
Yep. Yep.
So we're still going to get one more before the next Fed meeting, which is good. So, and I think the next CPI report for September is September 11th. So next month we get PPI first and
And
then
then
CPI.
CPI. Yeah.
Oh God.
One of those numbers is gonna be nasty. I can guarantee
And if
that.
and if it is, the Fed might take that rate cut off the table. So
Yeah.
now I will say this: always remember, right? Let's think logically here. The entire market will probably react with a hotter than expected CPI and PPI number. But as an investor or trader, this is what you should tell yourself. What businesses don't produce product that I could potentially catch at a discount?
Yep.
And every time that happens, I always want you to think, because remember, tariffs are on physical goods, physical product that gets shipped between international borders. Think of businesses that don't have to worry about that. Software companies
Software.
and financials.
Yep.
Go look at what JP Morgan did yesterday after the PPI report. It sold off and bounced.
Mm-hmm.
A lot of the banks bounced after the PPI report because some people realize banks don't have to worry about tariffs.
You're right.
Now, some of their customers might have to worry about tariffs, which might affect some of their business, but banks don't ship physical goods.
They don't ship physical good. No.
Neither do software companies. So, one company that I thought would bounce a little bit more, but didn't, it continued to sell off was Planeteer. But I got my eye on that one. If I can catch a nice little swing with Planeteer, I might be a buyer.
If we can
I
feel
think.
if we can feel this gap from a few months from what a couple of weeks ago, I think we might
Hmm.
be good. But
And another name that sort of bounced off of the lows after that PPI report was Snowflake.
Snowflake also, yep.
Yeah. So I'm taking a look at that one and seeing, is there opportunity there? Because
Mm,
if I'm not mistaken, Snowflake's a stock that hit a high of 429 about a couple years ago. And
yep,
ever since then, it's been on a consistent drop.
yep.
And we're sitting inside on the year. And if we look at the weekly, we just dipped this week into an area where we saw buyers at 192
Hmm.
on the monthly, on the weekly, inside on the year. And then let me look at what the monthly look like.
That 194 support held too, so that's a good thing.
Hmm. And then there were some short sellers at 198 that got squeezed today slightly.
Mm.
So I'm looking at this 198.35 area. If it becomes support, I might have to take a look at this. So remember, good companies. Now, not all software companies are doing good in this environment
Right,
because
right.
I think CRM is one that has been struggling.
CRM, Zoom. What is the
Yeah,
other one?
CRM, Zoom,
I think.
who's in? I think Adobe has been struggling too. If I'm
Mhm.
not, I think Adobe might have made a good move today, but yeah, Adobe made a 1.8% move today. So I would be looking at software and saying, are there some good businesses or good companies that I can get if we see a pullback because PPI is hot, CPI is hot, tariffs are hot.
Yep,
Can
yep,
can
yep.
I can I actually find some discounts out there? So think software, think financials.
That's a good place to be.
Yeah.
So
So
we'll see what those numbers looks like in September, man. Because
hmm
September is gonna be an interesting month, you know. So
yeah.
we shall see what's gonna happen back then. But the next topic we have on hand is Beyond, bro. You guys go look at the Beyond stock. Go look back in 2020. Hold on, I forgot to see how much was it in 2020. That stock
Yeah.
was booming. It was like one of those meme stock.
Yeah. Pull that chart up.
In 2020, this is an ugly, 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 ugly chart. 2020 Beyond hit a high of $239.
No. Woo!
And look at what it's just trading us $2.23. And it just filed for bankruptcy. Bruh. Bruh.
Woo!
Talk about if you invested in it, oh my God, you just lost everything. And they just literally IPO'd in
They didn't
2019.
Yeah, they didn't even last 1, 2, 3, 4, 5, 6, 7 years before BK. Dang.
Bruh. $2.23 from $239.71.
You know who they reminded me of?
Hmm.
That a company that went public, Blue Apron, the food delivery
Oh
company.
yeah, whatever happened to them?
Yeah, they went BK. I
Really?
called that bankruptcy years ago with my friend Winston, and they went BK. I didn't trade it, unfortunately.
Ooh. Is
Yeah,
it APRN?
Apron. Yeah,
That
yeah.
thing was it was a high of $1,980.
So I don't think that was the actual stock price. They did, I think, maybe one or two reverse splits.
Oh, okay, I was gonna say
Yeah, yeah.
because
I think they did one or two reverse splits.
they're sitting at
But
they're delisted already. They're
yeah,
gone.
delisted. Yeah, delisted completely. Gone. Every investor's money that invested in that company,
Just
if you
down the
didn't pull
drain.
out, gone down the drain.
Down the
And it
drain.
looks like Beyond Meat is going to, you know,
If nobody come to rescue, they're gonna be delisted.
oh
They'll
yeah,
be
I
gone.
think I think they're done. I think they're done. And it's crazy because the Beyond Meat burger is really not that bad,
Mm.
but I saw somebody send me a tweet. So somebody was talking mess about them on Twitter, and then they tried to clap back.
What, Beyond Tunnel Club?
So Farmer Bills is a meat company, and they
Uh-huh.
tweeted This was back in 2023 on 9/11.
Yeah.
Every time I see Beyond Meat it says every time I see an ad for Beyond Meat, I throw steak on the grill. Anyone else? Then Beyond Meat's Twitter page clapped back and said, every time I see an ad for Beyond Meat, I Google steak on grill, copy and paste the second photo, smash the tweet button, and wait as my 6 retweets roll in. So they tried to clap back, and now Farmer Bill gets the last laugh.
They get the last laugh. They get the last laugh. Damn, but another broken company. If you invested in a broken company, this is usually what happens to your money. It's gone down the drain, you know.
Yeah. And I think
That's
that
crazy.
the addressable market for vegan meat, I think it just didn't play out the way people thought it would play out.
No, no.
Just like if you look at Peloton, everybody thought that the whole like gym thing was gonna go away because of COVID, and
Yep.
Peloton, they miscalculated everything.
They did. They did.
Everybody thought, oh man, yeah, home gym, blah blah blah,
Yep.
this.
Yep.
And
Yep.
Peloton's another company that I think is on the verge of
Peloton.
not making it, because if let's look at Peloton. Peloton, yeah, they hit a high of 171 in 2021 after COVID.
It's sitting at $8.
$8 stock. $8 stock.
Man.
But
At one time they almost had a deal with Apple.
Apple,
I don't know what happened to that one.
I don't think Apple wants to be in
That would
that
have been
business.
their lifeline. Because
Yeah, I don't.
I thought maybe Apple can, because Apple have that subscription thing for like
Oh,
their
they want the
fitness and stuff.
data. They want the data.
Right. So I thought maybe Apple can partner up with them, use their devices, and kind of like work with them and figure out how to like do subscription and stuff. But they probably look at the books and like, yeah, you guys ain't making
Probably
money.
looked at the books, or that maybe the price is too high.
Yeah. Yeah, like
Yeah,
nope, we're not doing it. But
we're
yeah,
not doing
man,
it.
as Wale always say, buy broken stocks, not broken businesses. So make sure you you
Yeah.
pay attention whenever you
And
invest in stocks.
this is, I always tell people, when you want to own individual positions, right, of an individual stock, always listen. Oh, and now you can even just go on ChatGPT and just type in what happened on the last earnings report, and
Facts.
just get a synopsis.
Yep.
Because again, you have to understand, as a shareholder, you are a owner of the business. And I will ask anyone, if you are an owner of any business, why wouldn't you want to know what's going on with the business?
Yep.
It's another reason why I say, if you don't have a very, 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 very large portfolio, or someone managing the portfolio for you, don't try to own a bunch of different names, because it's like you have to stay in tune to what's going on. And so like you got a $10,000 portfolio, right? Let's just say you got $10,000 portfolio. There's no reason in my mind why you should have like 15 or 20 positions.
Yeah. Yeah.
Condense that to like 3 or 5 positions and
Hmm.
concentrate on the good businesses,
Yep. Yep.
And if you want to be diversified like that, use an index fund. It's more cost effective.
There you go. You get
So
exposure to a lot of stuff. So
you get exposure to a lot of stuff.
mhm.
So I always tell people, diversification is important, but when your portfolio size is like not that big, concentrate on being diversified through ETFs.
Yep.
Yeah,
Yep. Yep.
it's just a better route. And if you want more exposure to a certain position, like let's say you own, I like Boo instead of QQQ because it's cheaper, same thing. But Boo, let's say you own VOO, right? And you're like, but I really like NVIDIA. Build a satellite position in NVIDIA around that Boo position
Yep.
and just do that, you know?
Yep. Yep.
So
Yep.
that to me makes more sense when you're now, then as your portfolio starts to grow, then you can start to buy individual positions. But
Yeah.
keep it concentrated when you have, when you don't have a big portfolio.
Yep. Yep. Get really good at at one sector of the market and understanding it really good, and then
Hmm.
understanding how they'll move and stuff. So, but
Yeah.
yeah. But other than that, man, let's move on to our financial Fridays. I think
Yes,
we have
sir.
today on the topic is mini bonds. Somebody wanted to talk about mini bonds. I'm actually gonna pay attention because yeah, I haven't really done too much of deep dive into mini bonds. So
Yeah, muni bonds, they're not very complex, but they serve a specific purpose in people's portfolio. So we're going to talk
mhm.
about that in this Financial Friday discussion. So let me
Yep,
share my screen
do it.
and then we'll get started. on this presentation. All right, perfect. So municipal bonds, usually some people use the short-term nickname muni bonds or just munis. So what are municipal bonds? Municipal bonds, they are debt securities that are issued by states, cities, and public entities to fund public projects. Now, municipal bonds does not include the United States government. They have their own classification of bonds that they issue, and those are called treasuries. So treasuries and municipal bonds are not the same thing. So remember, states, cities, and public entities. So think of your, state of California. Here in the Bay Area, we got city of San Francisco, city of San Jose, Oakland, water districts and things like that. Those are companies that issue debt to fund various projects. Typically, there are two types of municipal bonds. There are GO bonds and revenue bonds. GO bonds are backed by the taxing power of that entity. So that entity collects revenue through maybe sales tax, maybe property taxes, things like that. That's what funds the interest payments on GO bonds. Revenue bonds are bonds that are funded by specific projects. So think of like toll roads, maybe stadiums that are getting built, maybe you know, public projects or things that are getting built. Those are revenue bonds where the revenue from those projects, right, get delivered to the investor. So Golden Gate Bridge, I'm not Golden Gate Bridge, the New Bay Bridge that was built in the Bay Area a couple of years ago, right? Some people invested bonds into that project, right? Every time toll money comes in, the money from that project helps fund the tolls. I mean, the tolls from that project helps fund the interest payments on those bonds. So that's what revenue bonds are. Now, who are the people that buy revenue bonds? Individuals like myself, um, mutual funds buy revenue bonds. Insurance companies are big buyers of revenue bonds. I mean, of municipal bonds, because most insurance companies invest in fixed income based on their um, assets and liability matching. Then you have banks, institutions like pension plans and things like that that tend to invest in these types of bonds. All right. So let's talk about credit quality. So credit quality when it comes to municipal bonds, they're graded, right? Just like me and you who are who get credit ratings, right? We get graded by credit agencies, TransUnion, and the other two credit agencies. So we get our credit gradings. The same thing happens with muni bonds. So anything that's graded triple B to about triple A B3, depending on the credit agency, is considered investment grade. So those are people that are in the higher um, credit rating. So that would be somebody with like a 650, I'd say 700 credit score or higher. That's investment grade, where you have a great track record of paying back your debts on time and in full. So people who do that, typically have that 750, 800, 850 credit score. Investment grade is the same thing. Now, high yield or triple B minus or below are called junk bonds. So these are people that have struggled in the past with their credit track record, where maybe they've missed a few payments, maybe they've defaulted in the past, maybe they've gone bankrupt, whatever. Those are the lower credited agencies. So those are called junk bonds. The difference between investment grade and junk is the interest that you earn. So let's think about this. If I'm somebody who has let's just say I got a 600 credit score and I go into a car dealership and I want to get a car, or let's say I go into a bank and I want to get a mortgage, my interest payment is going to be higher than someone who has like a 750 or an 800 credit score, right? The same thing happens with bonds. If your credit rating is low, I'm going to demand a higher interest payment for loaning you money. Because remember, as an investor, you're loaning money to that entity. You're giving money to that entity, and they're telling you, we're going to give you back your money back at the end of the terms. And while we hold your money, we're going to pay you interest. So they're going to pay you. So if you have a bad track record or your track record isn't pristine, I as an investor am going to demand a higher interest rate. But someone who has a good track record, that interest rate is going to be lower. So some people like junk bonds because the interest rate is going to be higher. That's one of the bigger benefits of investing in junk bonds. But you also have to understand that the default risk of you not getting your money back in full is also higher. So there's a trade-off. You want higher yields, you got to take more risk with somebody who may not pay you back in full at some point. You want more guarantee that you're probably going to get your money back, then you're going to get a lower yield. So that's the difference between high yield and junk. I mean, high yield and investment grade. We have our three rating agencies: Moody, S&P, and Fitch. So those are the people that typically rate these bonds based on different metrics that they use. And in general, in the muni market, the default rates are pretty low compared to corporates, right? So corporates have a little bit more higher risk than munis because a lot of these municipal entities, they have reoccurring revenue regardless of what they do. It's the management of that revenue that usually gets them in trouble because, again, in the state of California, everybody pays property tax. And if I want to raise property tax, I can raise property taxes. In on the Golden Gate Bridge, if you want to get from Oakland to not Golden Gate Bridge, Bay Bridge, you want to get from Oakland to San Francisco, you have to go through that bridge. So they're always going to be able to collect tolls, right? And they can always increase the toll price. So when you have that type of cachet, right, your revenues are a little bit more pristine. That's why you see municipal defaults are a little bit low. They're lower typically than corporates because corporates, you can have a product that people don't want in a few years, and that can put you out of business pretty soon. But a bridge, that you're not gonna you're not gonna lose that business because there's always going to be cars on the road. So that's why the default rate is a little bit lower than corporates. Now, tax advantages of muni bonds. This is why a lot of people are attracted to them. So, interest earned, so the interest payment, the dividend payment that you get on your muni bonds are federal tax free in most cases. There are some exceptions, but in most cases, they are federal tax free. So, let's just say you get $10,000 a year in muni bond interest, that doesn't show up on your tax bill. You get $10,000 in interest from a savings account or $10,000 in interest from, a CD or $10,000 in interest from treasuries, you're taxed. So you have to pay taxes on it. Muni bonds, tax free on the federal side. Now, if you also live in the state of the issuer of that muni bond, so if I'm a California resident and I buy a California muni bond, it's also state tax free, which is really good, where I'm not paying taxes at that level. So that's why it's very attractive for certain investors, especially those that are in the higher tax bracket, where the more income you add, the higher your tax bill will be. As a financial advisor, sometimes when we're dealing with people who are in like that high 30, 40% tax bracket, and they're like, I'd like to find a way to generate more income, but I don't want to pay more taxes, then we stop shopping in the muni bond market. For clients that are in California, we start looking for California municipal bonds because they can be tax free on the state level and on the federal level. So that helps their overall balance sheet. Now, there are taxable munis that do exist for projects not qualifying for tax exempt status. Doesn't happen often, but it's not always guaranteed that it's going to be federal and state taxes. So always be sure if you're buying individual bonds, if you can, pretty expensive if you want to get individual bonds. But if you're in a mutual fund or an ETF out there, you just want to make sure that a lot of those bonds that are in there are tax exempt at the state level if you're looking to buy a state level ETF muni bond. When are they useful? So muni bonds are designed for income. Bonds in general are designed for income. That's basically what they're income instruments where you're paid on a regular basis. Can they grow? Can the value of a bond appreciate? The answer is yes. but it appreciates based on how interest rates move. That's what determines whether your bond value will go up or your bond value will go down. So let me give you an example. Let's just say we are in 2020 and we are issuing, the market is issuing bonds that are at 3%. So if I go into the market to buy a muni bond, the bonds I'm buying are they have a yield of 3% on an annual basis. Let's just say interest rates go down. Now, the new bonds that are coming to market are paying 1% rather than 3%. What happens? The demand for my 3% bond goes up. Therefore, the price goes up because people are going to want my 3% bond rather than going to the new issues and buying these 1% bonds. So that's how your bond can appreciate. And if your bond appreciates and you sell it for a profit, you don't get any tax exempt status from that. Your capital gains are taxable. So remember that. You buy a bond at par for $100, that bond is now trading for like 110 or 105 at a premium, and you sell it, you got to pay tax on that difference. Now the opposite can happen as well. Let's just say I have a bond that's paying 3%. The new issue bonds that are coming out are paying 5%. Nobody wants my 3% bond when I can go in the open market and buy a bond for 5%. So what happens to my value? It goes down. So if my bond value is going down, I'm not going to sell it. I'm just probably just going to hold it to maturity so I can get my full principal back, because that's the purpose of a bond. I loan you the principal. You tell me you're going to pay me back at the end of a certain term, and then while you're holding my money, you're paying me interest. So long-term taxable accounts, muni bonds are very great for that. People who are not looking to sell the bond, but they want to hold the bond for as long as possible and generate income from that bond. People add them to equity portfolios because it diversifies your risk. So it brings the risk level down of the entire portfolio. But again, it's not a growth instrument. Its main objective is income. So you're buying bonds because you want to generate income. Can be structured to match cash flow needs for like retirement expenses. So sometimes we build municipal bond portfolios or bond portfolios for people who actually need money at certain points. Like, I worked with a company that helped build a bond portfolio for Golden Gate Bridge to help them fund a $10 million retrofit project. So basically with those cash flows, we're saying, okay, by the end of this term, we need $10 million available to Golden Gate Bridge to do this, fund this project. Same thing with muni bonds. It's basically the same principle. Let's look at the size of the market. So about $4 trillion in outstanding muni bonds. So that's pretty big. So just to say about the size of an NVIDIA when you look at the muni bond market. Again, very, very go bonds have very, very low default rates historically. So about 0.1%. So, fairly safe investments. I'm not going to say completely safe, but fairly safe. So not a lot of variability when it comes to that market. Now, when I say that, that's because if you hold it to maturity, right? If interest rates are fluctuating and you sell for a loss, that's on you. But if you agree to the terms and you hold to maturity, then you obviously, hopefully, will get your money back because those are the terms and the agreements that you went on when you purchased that bond. Sensitive to interest rates and credit outlooks and tax policy changes. So again, those are the things that will fluctuate the value of bonds. Over 70% are held by individuals in mutual funds. So that's where a lot of the market is when it comes to these. And then liquidity varies based on the issuer and based on the size of the bonds that are getting issued. So sometimes they're not always liquid. So you may not be able to find a market to sell your bond. So you're kind of forced to hold it to maturity. So just keep that in mind as well. So again, good in the income stage, or if you're an investor looking for income. If you're young and you're looking to grow your portfolio, these are probably things you don't want to put in there. So that is it when it comes to muni bonds. Hopefully that made sense.
No, that makes sense, man. Now, let me ask you this. So how does somebody goes about like finding those bonds and actually buying them and putting money into it? Like, do they go to kind of like what we do with the stock market? We just go to like a
Yeah,
brokerage and go to
go through a broker. So you can usually find them via mutual fund or ETF. So that's
okay.
typically where people like you and I will go to buy a muni bond portfolio. So you are in Atlanta, right? If you want to, you can, I think you might be able to find a Georgia specific ETF
Mm-hmm.
muni bond where
Yep.
you can buy it and the income from that is tax free to you at the federal level and possibly tax free at the state level. Now, if there's some taxable income at the state level, it might be small, but the mutual fund company is the one that has to figure all that stuff out, or the ETF
Yep.
company has to figure all that stuff out. But
Yep.
there are state specific muni bonds. Usually, the states out there that I think that exist, New York's got a few, California I know's got a few, Atlanta and Texas I'm not exactly sure because there is no state tax, but those are big issuers of bonds because they're big, they're high popularity states. You
Yep.
might be able to find, but I know New York and California, those are two of the biggest state specific muni bonds out there that you can purchase. So
Okay. But
yeah.
so, but still, the same risk applies, right? Don't go crazy and buy all these different mini bonds and just
No,
put
no,
all
no,
your
no.
money out there. So
No.
you still want to manage your risk, right? You still want to operate as an investor, not necessarily just somebody's like, oh, this is good for income. I'm just put all my money in there. Don't do that.
Yeah. Says that's
So,
why billionaires love California, NYC. They're buying municipal bond. Yep. I'm more. Yeah. So I will say, so they fit in your portfolio. Like, they serve a specific
yep.
purpose. But I always tell people, if you're younger, right? Like if I see someone who's like in their 20s and 30s with a heavy bond portfolio, I'm telling them this doesn't really help you grow your funds because there capital appreciation? Yes, but it's
Mhm.
very limited, very, very limited. So keep that in mind when it comes to when it comes to investing in bonds like that. So when you
Yep.
start getting into that high tax bracket and things like that, that's why sometimes when I see all these like millionaires and all of these like, who are like on Twitter, on social media, I'm like, is your tax advisor opening the doors to muni bonds to you? Like, are they talking, having that conversation with you? Because the more you make, the more you're going to get taxed. Because remember, the tax bracket are tiered.
Yep.
So yeah, if you are a successful influencer and you'd like to start generating tax-free income, I'll let your boy
I'll let you boy.
for a small fee.
Wait. You upgraded your your clientele a little bit now. Last week was the OnlyFans. Today.
OnlyFans. Well, I mean, they in the same category. They
No, they are in the
influencers.
same
They
category,
influence, right?
Yeah,
So if you're
yeah.
an influencer and
Period.
you need financial guidance, right? You need to diversify your income streams because you can get a taxable equivalent yield. I think in this market, you can probably get like 5 to 6% tax-free
Yeah.
yield.
Yep.
That's not bad. Like, if you got 100 grand, let's just say you got $1 million, you put $1 million in a muni bond, that's what, 50 grand a year?
Yep.
That's not
That's
50,
not bad.
50 grand a year tax free.
That's not bad.
That's not bad. That's
Up
not bad.
for,
That's not bad at all.
from $1 million.
Yeah, if you got $1 million,
Let's say you put two.
that's 100 grand a year tax free.
Yep. But I think like people's mentality, right? It's like they're thinking they're giving up 2 million to be making 100,000 when in reality you're using money to produce more money. So
Correct. Correct.
it's like if you could get
Because
that thought into your
because this
brain.
is this is this is how I look at it. Let's say you an influencer, right? You got, I don't know, let's say you got $10 million. Let's just say you got $10 million.
Hmm.
And of that 10 million, you put 2 million into a muni bond portfolio. Now, let's just say that 2 million is sitting in your savings account.
Right.
You're paying taxes on that interest,
And you're not making money.
and you're not making money.
Mm-hmm.
But
Matter of fact,
and but
you losing
you're
value
losing
too.
money because you've got inflation and you've got taxes.
Yep.
So take 2 million out of the savings, put it in a muni bond portfolio,
Mm-hmm.
and let that generate tax-free income for you.
Yep. And live off of that.
Somebody asks, where are they paying 6% on muni bonds? So some of them might be in a high yield space, but I'm talking about on an after tax basis.
Mm-hmm.
So if you, I want to say somewhere between 5 or 6%. So let's just say I have a corporate bond that's paying like 5 or 6%. I mean, let's just say, I don't know, some corporate bonds might even be paying higher than that. let's just say you have corporate bonds that are paying you a certain amount of interest. By the time you add the tax on that interest, you get to a certain level. It's not a real like 7 or 8%. Let's just say the coupon is 7 or 8%. After taxes, that coupon is not generating a net profit of 7 or 8%. It's probably a little bit lower. But when you compare it to a muni bond that might be paying a little bit less and you're not paying any taxes, remember you keep most of that earnings. So I'm talking about on an after tax basis where you can probably find something in that 5 or 6% base. Some of them might be high yield or junk. You might have to dip into the high. Now, investment grade, you may not be able to get that 5 or 6%. But
Yep.
on the junk side, you can possibly get that 5 or 6%. Muni bonds are the better deal for sure. Yeah. So you might have to dip into the junk side. Now, this is what I'll tell people. When you're investing in high yield bonds, you're better off not trying to buy an individual bond yourself. Go into a diversified bond portfolio. So let me see
Yep.
if I can find one because I had a list. Let me see if I can find this list. We might be going
Listen,
overtime.
I'm looking at AMC. AMC has a bond. It's rated CCC, very speculative.
Yeah.
Their yield is greater than 12%.
Yeah. See, that's called junk.
So you were taking a lot of risk there.
Yeah. So again, you invest in AMC, right? So you get 12%
Yep.
yield annually on that bond, right?
Yep.
But you have to pay taxes on the interest. So that it's not a real
It's
12%.
not really 12%. Yeah.
It's a little bit lower than that by the time you calculate your let me see if I can find it. Let me see. Uh, man, I had a list. Where can I find it? So let's go to. I'm about to just look this one up real quick. This one I don't think is a California specific one. They giving me an advertisement. All right, let me see.
I just looked up another one. T-Mobile Legacy Bonds is rated BB negative, 6.5% yield on that one.
Ooh,
And
what's
there's some crazy ones in here. Sheesh.
trying to find? Okay, so here is a mutual fund that is through. Who is this through? This is through Prudential. This is one of their funds. I just want to see what the I want to see what the dividends are. Give me the I just want to look at the fund profile page. What is your annual yield?
See the
Let's go.
Prudential?
Yeah. I'm trying to look at this the fund. Okay. Average maturity 5.2 years, duration 3, standard deviation 6.2. Okay, I get all that. I want to see what is your SEC yield in the high yield space. All right. I'm gonna have to go to my
So it says
let's
Prudential Financial Inc. They have about 5.125% bond that's due in March 1st, 2052. So it's about 5% on the yield.
No, I'm looking at a specific fund that they have.
Okay.
Yeah. Okay. So this is a fund that is managed by Prudential. This is an institutional class fund, so you need to put in a sizable amount of money into this share class. They probably have other share classes as well, but it's a high yield fund, and the yield on it is 7.2%.
Hmm.
So, and I'm sure that this is a diversified bond fund because I don't think it's California or state specific. It's so mostly going to be tax free on the federal side. But this is an institutional level fund, PHYZX. Yeah, 7.20 yield on that muni fund. So
Not bad.
you can find some good yield out there on the muni side. But if you want to get to that 7-8% maybe, you got to start floating to the junk side.
The junk side, yeah, which is
Yeah,
a little
so
more risky.
a little bit more risky. So,
Hmm.
but this fund is actually done really well because it's also appreciated in value. I'm pretty sure based on also in reinvesting your dividends. I think going back 10 years, it says if you put in $10,000 in there, you'd be at $17,773, which is also beating the index. So
Yeah,
that's not too
big
bad for
time.
yeah, that's not too bad. So slow growth, but growth nonetheless.
Well, that's definitely was a good lesson on the Muni bond. So make sure you
Yeah,
guys check it out. And again, like I mentioned, with everything else, you gotta analyze your risk. You gotta figure out which one you should be getting into and understand how it works, maturity, yield, and all those different things and rating. So make sure you keep an eye on all those different things before you actually jump on there. Or you can
yeah,
hit up Wale. Wale can walk you
yeah.
through
So someone
it.
said institution minimums are at least 100K. Sometimes they're higher than that. I've seen institutional
Hmm.
minimums be a
Hmm.
million. Like I've seen
Yep.
institution. So if you have a lot of capital, you can get into these funds that usually have cheaper expense ratios, right? So with all of these, I mean, with all of these social media millionaires and stuff, I'm actually surprised a lot of people ain't talking about mini bonds and adding it to their portfolios.
Nope. They want
Like
they
if
want
I,
the
if,
shiny stuff. They want the shiny stuff.
I guess, yeah. But this is how I look at it, right? If I had $10 million in cash, or let's just even say $5 million in cash only,
Hmm.
just sitting in the bank earning interest, I'd take a million of that and put it in muni bonds to generate tax-free income.
Yep.
Like
Yep.
that'd be a no-brainer to me.
Yep.
That would be a no-brainer to me. And if I hit the lottery, right, I would do
Oh,
the same thing because worst case scenario, if I spend all my money, I got something generating tax-free income for the rest of my life.
that's crazy. Speaking of the lottery, somebody just hit I think they hit like 15 or 10 million, 10 to 15 million dollars in lottery, and their payout was like 3.5 million
Oh,
dollars
after taxes?
after taxes because and they
Sheesh.
took the lump sum. So, you know, they got
They,
slaughtered.
they got slaughtered. They got
Yep.
slaughtered. That's crazy. They probably
Yeah.
I think it's crazy how like a lot of these like mega tax winners always come from the high tax states, with the exception of Florida a couple of times.
Yeah. Yeah. Just
So
there's something there. I'm just saying there's something there.
yeah. So but yeah, the muni bond market, I think for me at this stage in my life, it don't make sense for me to invest in munis. I'm not looking for
Mm-mm,
income. I'm in the
mm-mm.
hyper growth phase of my life.
Yep.
But you'll get to a stage where income really matters, right? And you need to start diversifying where that
Yep.
comes from.
Yep.
So, like I said, I need to do a campaign and start reaching out to all these influencers who are rich and be like, hey man,
I'm
let's
telling
build
you.
you let's build you a muni bond portfolio to generate tax-free income for you.
Hey, you can become the influencers tax advisors,
The tax
tax
advisor for the influencer.
or investment advisor. I don't know. That would
Yeah,
help them out,
I
man.
should I should start a campaign. I am licensed,
I'm
so
serious. I'm
maybe.
serious. I think if you
Maybe.
get one or two of them and you do good with them, they will go out and tell everybody. The next thing you
I
know, you
reached out to one and he didn't believe me. I talked to him. I was like, if you had $100,000, I could probably build you an income portfolio that would spit out like anywhere between 8 to 9% a year. He was
mm-hmm.
like, no way, that's not. And I was like, I can do it. Like
Yeah.
I said, you a millionaire, right? Give me 100 grand,
Mm,
right? I'm not even going to necessarily manage it, but I'm going to tell you what to buy. We're going to build. I'll tell you how to build a portfolio,
yeah.
and then you'll look at the income that comes out of it every month. Annualize that number monthly, and you'll see it'll be like 9 or 8%. And he was like,
Yep.
all right, I'll think about it, but I haven't heard back from him.
This
So
this is a plug here. If you are an influencer and you are a millionaire, I'm not talking about social media millionaire. I'm talking about like real life multi-millionaire. I'm telling you, hit
and you
Wale
got
up.
money that you want to help generate
Yes.
income, yeah, we can build something. We can
Yep.
build something.
Yep.
Yeah,
There
I
you
got a
go.
friend of mine. His dad's about to sell his house, and he's like, you know, I just want the money to make money for me.
Yep.
Like I don't want to spend the money down. I just want income. I told him I was like, I got you. So
Yep.
when
Yep.
when that house sale closes, I might share the number that comes out of the portfolio every single month based on
Yep.
what we build. Got a question at what age or income ratio do you think these types of bonds make sense? To me, you got to be in like the high 30, high 40% tax bracket. So either the second to highest or the highest tax bracket.
Yep.
Um,
Yep.
that to me is when it makes the most sense. Now, can you buy it if you're in the lower tax bracket and you just want to diversify? You can. But you're going to get more bang for your buck the higher your tax bracket is.
Yep.
So, you have for like NBA players, athletes, you make it $1 million a year, you probably want to have something
Going into
allocated to
it.
mini bond.
Yep.
Yeah.
Yep.
So
But like I said, they're not sexy. They're
yeah,
not.
they're not sexy at all,
They're
but
not. They're not.
they make sense.
Yeah, they're not those instruments that people are gonna be talking about online. Talk about I have some
No,
muni
no, no, no,
bonds.
no.
I'm making $50,000 a year. For nobody's gonna be bragging about that, because they're not sexy, but
No, they're
they're
not.
needed. If you really do it the right way,
Yeah,
you
if
can
you do it the
be
right way.
you can have income for the rest of your life.
Yeah,
You know?
because the muni bond market's not going anywhere. There's always going to be
Yeah.
issuers, and this is another thing. Why I don't like the whole Dave Ramsey,
Mm.
no debt thing. And no debt as an individual is good, but you have multi-billion-dollar corporations and multi-billion-dollar institutions that have debt. As long as if you leverage it the right way and you manage it the right way, it
Yep.
makes sense.
Yep.
But don't feel like if you got a mortgage, you got to pay your mortgage down in super fast. You
Yep.
know, now if you're buying depreciating assets and you're using debt for that, different story.
Mm-hmm.
But if you're using debt to leverage buying an appreciable asset, it's not necessarily a bad thing. So,
Yep. Yep. Especially if you know how to do it the right way.
the bond market is the largest market in the world and it ain't going nowhere. The bond market is way bigger than the stock market.
Yep.
Just remember that. Remember that.
Facts.
Now, not the
Facts.
muni bond market, but the bond
The
market
bond
in
market as a whole.
general, as a whole, is larger than
Yep.
the stock market. So,
Yep.
anybody know any influencers out there that need help?
Hey, while
Call
they
me.
up. Yep. We need to get you a t-shirt that say influencer. Hit me up.
even if
Man,
you
but
even if you a 1099 stripper, hit me up.
that yo, I'm about to hit all the Atlanta strip club. Be
Yeah,
like,
I'm
my
about to go to
boy, my
Magic
boy,
City
why
and start
they?
just passing cards. You're a 1099 employee. We need to set
Right.
you up with an individual 401k plan. We
You
need to
go,
get you some muni bonds. We need to build you an income portfolio
you gonna make it rain business cards in that.
and get kicked out.
Boy, what you doing, my boy? What you doing? Oh man, but that was a really good information. I mean, like I think a lot of people need to hear that, and I hope people really take advantage of that. Just do more research and all that stuff. But
Yeah,
I know we're laughing about it, but I'm telling you, if you're influencer out there, you're making good money, you need to make
yeah.
sure you have a stable income because you ain't gonna be influenced for the rest of your life. Some days is gonna come where you're gonna have to chill.
Because
So
the way I look at it is, you'll get to a point where you can't do what you used to do, or
yep,
you don't want to do what you used to do, right? You got a pool of money that's now generating income for you.
yep, yep.
I mean, that's not a bad place to be.
It's
That's not a
not
bad place to be.
because
I actually built a portfolio. I've been building all kind of portfolios over the last like 2 years, just looking at data and statistics.
mhm.
Where if you put in $1 million a year ago into this portfolio, to date, it would have spit out $239,000 in income
That's
without
crazy.
spending your million and
That's
keeping
crazy.
your million liquid.
And that's based off of dividend or
That's just interest. That's
it's
dividends.
interest.
That's just
Wow.
dividends.
Crazy. That's crazy.
So those are the
Yeah.
type of and to me, like people will ask me, like, why don't you invest in like I'm not a big fan of real estate because it's not liquid.
Mhm.
And the way I always look at it is if I can build a portfolio that can spit out the same income from real estate, why wouldn't I go with this portfolio?
Yep.
Now I will say this: real estate has more tax benefits.
Yep.
Real estate has more tax benefits. Don't get me wrong. But it's more capital intensive, right?
Yep.
You got to
Yep.
loan money. You got to put money into you get loan money from a bank. Let's say you got $40,000, right? You buy a property, you do a whole thing. Let's just say by the time you buy the property and all that stuff, let's just say your net income at the end of each year, let's just say it's like 400, $500. My question would be is like, can I take that same capital and build a portfolio that
Business
can
portfolio.
that can that can give me the same thing without the headache of renters
Tenants.
and liquidity?
Yep.
Can I do that?
Yep.
And I've been, I'm a nerd, man.
I'm bro.
But
I'm
it
telling
it
you.
is possible. It is possible.
It is. It is.
It
It
is.
is.
If you know where to look and you understand financial instruments, it's possible.
Yep. Trust me, after owning a couple of properties and renting it out, listen, that's just my experience. I'd rather build a portfolio kind of like what you're talking about, and I'll probably get a lot more money and a lot less headache.
Lot
Even
this.
if even if I get less money and no headache and peace, I'm
Mm-hmm.
okay with that. You know what I mean?
Yeah.
So
But
yeah.
I will say this: I'm not saying that renting, like buying rental properties, is a bad investment.
Right,
I'm not
right,
saying that. Don't
right.
don't quote me on that. There are good investments if you buy properties in the right place and you get good tenants and it kind of runs itself, or you got a good property manager, right?
Yep, yep,
Those things can be good, especially if the property appreciates,
yep. Property
and then
value
you
goes
get
up.
you
Yep,
get tax deductions, right?
yep,
So
yep.
it is more tax friendly. But I always ask myself, if I want peace of mind and I can get the same income,
Mm-hmm.
that's just me. And I have liquidity, right? Because
Yep.
remember, if you want to sell a house, you can't like
You got
that's
to
a
go through a
process.
whole process. Yep,
If I've built a portfolio and it's in the market, I need liquidity. I got
yep,
it.
yep. You can
So
get it. You can get it as soon as possible. So
as soon as
yeah.
possible.
But yeah,
So
but that's a whole other lesson, man. I feel
that's a
like
whole nother that's a whole nother lesson. That's a whole nother lesson.
yeah,
Yeah.
I feel like people need to really understand all these different instruments that you can use to be able to get wealthy and
Oh
all
yeah.
this.
Oh yeah.
Um,
Oh yeah. So
but you got to start with one. You got to start with one and then
gotta
build it
start.
from there.
And you gotta start with a game plan. Like, what's the
Hmm.
plan?
Yep,
What's the plan?
yep,
Like if you always tell people when you create an investment plan, you have to have an objective. Your objective can't be I want to make money.
hmm,
It has to be I need income or I need growth or I need both.
yep,
And then it has to be I want to take high risk, low risk, medium risk.
yep,
And then you start to construct, then you start looking at how you're going to fund that plan. And then you really start to build stuff around that. So
yep, yep,
that's how people should think. And if you don't think like that, that's why people like me are here
yep.
to help
Come to your boy
educate you and
Wale.
walk you through the process.
Come to your boy Wale. And man, we are way over time, but hey, next week we have Jackson Hole. It's going to be very important because we're going to get to hear Jerome Powell answer questions and actually get to be candid with people and understand, how this market is affecting September and all these different things. So it might be a little bit shake up in the market depending on what he says. So please,
Yeah.
please pay attention to that. We also have some corporate earnings next week. I think mostly retail. Actually, Palo Alto is reporting next week. Interesting.
Yeah. I
But
got Palo Alto on my radar.
okay, but we have Walmart, Home Depot, Target, Lowe's, and I think Viking Cruises. So it's like, some retail mixed with a little bit of software. All is going to be next week also. So keep an eye on those ones. Also, I don't know if they're going to meet throughout the weekend, but you got to remember Putin is actually in Alaska meeting with Trump. So depending on how that goes, we don't know what's going to happen. If he says something crazy or he says something good, Monday comes, might be a sell off, might be, I don't know what's going to happen, but we'll see what's happening with that one.
I would pay for a cage match between those two. I'd pay for that.
I don't
I'd
know,
pay good.
man.
I'd pay good money for that.
Oh man. But other than that, yeah, keep an eye on those things next week, man. But as we about to sign off, Wale, you already gave a lot of good tips, man. Any last minute advice going to next week at all?
Man, the thing that I'll say is I just really hope is we kind of leave each episode and we kind of give people gems. Don't just like take the knowledge, like act on it, right?
Apply it.
Like apply it because that's where you're going to get the real benefit. And I always tell people you don't you got to start small. Start small, be consistent, be disciplined. So
Yep. Yep.
we're going to keep dropping the free game. I mean, like I said, I keep looking back at some of the things that we have provided over the last years, and
Good stuff.
man,
Good stuff.
good quality stuff. Quality is what we go for. It's
Yep.
quality information. Like
Yep.
not going to be pulling out random things out of the sky and just giving random opinions. There's always going to be a method to the madness and to the
Yep.
opinions that we have. So
Yep. Yep. And both of us are researchers, so it's like when we find something, we go in and we
Oh,
start
deep
talking.
dive.
You know,
Yeah,
we still
deep
deep
dive.
diving into it and trying to understand exactly. So
Yeah,
when we actually talk about it, we're like, okay, we actually done some research on it. You know what I mean? And kind
yeah.
of give you like, why do I think? For example, when we told you
Like the
guys about
backstory about
yeah,
Intel. Yeah,
why we think Intel's going to do this, why we think
and
Boeing's going to do this. We'll
and
list the whole
Oklo. Yeah,
Oklo, all of
yeah.
those different things. So
There's
it's
always
like,
a thesis behind it. Yep.
yep, yep. So it's not like out of random just talking about it, but
No.
with that being said, we're gonna sign off. Thank you so much again for being here today, guys.
Appreciate
Please
everyone.
review, yeah, please review, subscribe, tell people about us, and yeah, we'll talk to you guys next week. Have a good weekend and be safe.